Something serious is brewing beneath today's crypto market surface, and this time it is all about silent giants moving Shiba Inu in the shadows. Wallets that were completely inactive just days ago have suddenly woken up, pulling billions of tokens away from exchanges. Analysts are tracking every move, traders are watching in disbelief, and the community is asking one question: is this the beginning of a massive hidden accumulation wave? Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. To understand what is happening with Shiba Inu whales right now, we need to look at how this month has evolved. Through most of early November, big wallet activity was surprisingly quiet. Price slipped, sentiment weakened, and headlines focused on selling pressure and fatigue. Some reports even highlighted whales sending tokens to exchanges, hinting at potential dumping and downside risk. That created a narrative of fragility and fear around Shiba Inu. But underneath that story, a second narrative started to form. New on-chain and AI-driven analysis showed that, despite the negative mood, large holders were still positioning around Shiba Inu during deep dips. Detailed breakdowns described whales quietly buying into weakness from October into November, framing their behavior as long-term accumulation rather than panic. By mid-month, the picture was split. Public sentiment felt heavy, yet data hinted that patient capital was still circling the asset. Then the numbers shifted in a way that no one could ignore. According to on-chain data reviewed in fresh mid-November reports, Shiba Inu recorded a major exchange outflow on the 15th of November, with roughly 125 billion tokens withdrawn from centralized platforms in a single day. The same data shows exchange reserves dropping from about 81.815 trillion to 81.693 trillion tokens between the 14th and 15th of November, with the downtrend stretching into the 16th of November. Other coverage described this move as part of an even bigger pattern, with a total of around 207 billion tokens leaving exchanges over a 24-hour window, marking one of the largest single-day outflows in recent months. Further analysis pointed to a separate net outflow of roughly 130 billion tokens, again emphasizing that more Shiba Inu was leaving exchanges than arriving. In simple terms, large holders were pulling their tokens away from the open market and into private wallets. Then came the event directly linked to 19th November. A widely followed market update flagged a specific whale accumulation signal, noting that approximately $2.38 million worth of Shiba Inu had been withdrawn from a major exchange in one move, and describing the transfer as proof of growing holder conviction. This was not speculation. It was traceable, documented on-chain activity. The so-called silent whales were clearly awake. Despite these huge movements, Shiba Inu's price action did not explode in either direction. As of 20 November, leading price feeds show the token trading in a tight band around the high hundreds region, roughly between 860 units and 900 units. The market cap sits comfortably in the multi-billion-dollar range near $5 billion, while daily trading volume rotates between about $130 million and $170 million. At the same time, new research released on the 20th of November highlights that whales have quietly bought around 4.8 billion tokens over the last 9 days, with tracked holdings rising from 102.7 billion to 106.58 billion tokens in that period. That is not a small number. It shows consistent buying through a dip rather than a one-off spike. The key point is that price has stayed relatively stable while this accumulation happened. No dramatic pump, no violent crash, just steady consolidation near the lower band. For seasoned analysts, that is exactly how serious accumulation usually looks. On-chain metrics back up the idea that Shiba Inu is in the middle of a deep accumulation phase. Exchange net flow charts show outflows consistently outpacing inflows across recent days, meaning more tokens are being withdrawn from centralized platforms than deposited. When that happens, liquid supply on the market shrinks, and assets move into long-term storage where they are less likely to be dumped. The earlier reports of 125 billion, 130 billion, and 207 billion tokens leaving exchanges are not one-off anomalies. They fit a broader pattern of supply migration from trading venues to private wallets. Meanwhile, a separate roundup of Shiba Inu news calls recent whale withdrawals a clear sign of conviction, while acknowledging that some whales did send tokens to exchanges around the launch of a new payment card. That mix of short-term selling and deeper accumulation explains why price looked weak earlier in the month, but now feels more supported. From a technical standpoint, multiple market recaps describe Shiba Inu as showing early bottoming behavior. Volatility bands have tightened, volume remains healthy, and indicators such as the Relative Strength Index cite near neutral levels, giving the market room to move up if demand increases. On higher timeframes, moving averages are slowly bending into more constructive alignment, suggesting that structure, not hype, is now guiding the trend. When you combine all of this evidence, a clear message emerges. The largest Shiba Inu holders are no longer in avoidance mode. They are in accumulation mode. At the beginning of November, headlines were dominated by stories of whales dumping, exchange inflows rising, and sentiment cracking. Today, the narrative has flipped. Confirmed outflows of 125 billion, 130 billion, and 207 billion tokens, a documented multi-million-dollar withdrawal from a top exchange, and an increase of 4.8 billion tokens in tracked whale holdings tell a very different story. The implication is that weak hands have been shaken out and stronger hands are stepping in. When whales remove large amounts of supply from exchanges, they make it harder for the market to dump on small pieces of bad news. At the same time, they set the stage for future upside because any renewed demand must chase a smaller pool of available tokens. This kind of move is usually not about hours or days. It is about weeks, months, and sometimes years of positioning. In short, this looks less like a random flurry of transactions and more like the opening chapters of a new accumulation cycle. The Shiba Inu community has responded with a mix of relief and renewed focus. Where people were previously complaining about red candles and fading excitement, many are now sharing charts of falling exchange reserves and rising whale balances. The specific numbers, hundreds of billions of tokens flowing off exchanges, and a notable single withdrawal measured in millions of dollars, have become reference points in discussions. Long-term holders see them as validation that they were not alone in buying the dip. At the same time, the split behavior during the payment card launch, where some whales sent tokens to exchanges while others later accumulated, has sparked mature conversations about market structure. People are beginning to accept that not all whales move in the same direction, and that the important thing is the net flow over time, not one dramatic episode. Developers have not tried to amplify the whale narrative. They have stayed focused on building and refining the ecosystem, leaving the on-chain story to speak for itself. That lack of forced hype adds credibility to the notion that accumulation is happening naturally, rather than as part of an orchestrated marketing cycle. Looking forward from this point, the key question is how long the accumulation continues and how deep it goes. If exchange reserves keep drifting lower and whale holdings continue creeping higher, the structural foundation under Shiba Inu will keep strengthening. In the near term, analysts are watching whether the token can hold above the recent support band in the high hundreds units and begin pressing against the psychological barrier above 1,000 units. In the longer term, over the next 3 months to 3 years, this mid-November accumulation phase could become an important reference point. If future catalysts, such as improved burn mechanisms, real-world integrations, or broader market rallies arrive on top of a supply base dominated by long-term holders, the impact could be far greater than if the market were still overloaded with liquid, speculative positions. For now, the story is not about an explosive breakout. It is about quietly tightening structure. From a balanced perspective, there is a lot to like about the current on-chain picture, but it still comes with normal market risks. On the positive side, verified outflows running into the hundreds of billions of tokens, a highlighted multi-million-dollar whale withdrawal, and rising tracked holdings among large wallets all point towards serious buyers stepping in. Exchange reserves are falling, and the token's price has stopped bleeding despite earlier pressure, which together suggest growing strength. On the other hand, whale accumulation does not guarantee instant rallies. The broader crypto climate still matters, and Shiba Inu's large supply means any sustainable move will likely require time and continued participation. Traders must also remember that whales, while often early and correct, can change plans if conditions shift. Still, compared with where things stood just weeks ago, the balance of evidence now leans far more toward accumulation than distribution. As the dust settles on today's on-chain activity, one truth is hard to ignore. The biggest wallets in the Shiba Inu ecosystem are no longer standing still. Exchange reserves are slipping, long-term holdings are rising, and the market is quietly tightening. Whether this turns into a powerful breakout or simply the foundation for future moves, one thing is clear. Whales have returned, and they are silently reshaping the path ahead. The day is over now. Remember to give it a big thumbs up to see our most recent material, share it, and subscribe to the channel.